What's going on, guys? Just let me know in the chat if you can actually hear my audio clear. Hello, hello. Awesome. Awesome. What's going on? Moses from Nigeria hearing loud and clear. Welcome. Good afternoon, Sammy. Right, so today's schedule is going to be different, okay? I might be taking a trade live. We'll see. It's okay, Joe. Hope you're well. So what we're going to be doing is I'm going to be showcasing essentially the flexibility of our system, uniqueness of our system. I'm not going to be talking as much. Anybody who is not a Falcon member, of course, if you have any questions, I might answer them. I'll see at the end. Thing is, I'm very cautious as to what I give away on here. I don't want to start teaching people on YouTube Live when we have students paying for a membership where they learn how to trade the way that we do. It's very disrespectful. It's disingenuous, and I'm not that kind of a person. So I want to make that abundantly clear from the get-go that I'm not going to be someone who sells out and does these YouTube live streams and starts teaching you guys publicly and giving you the value and the knowledge for free when we have Falcon set up for that and people paying their hard-earned money to be a part of that. I'm not like these other gurus out there, okay, that will sell out in an instant. So today's YouTube live stream essentially is going to be about me testing, and I'm going to be testing different sorts of instruments, commodities, indices, all different kinds of things, and I'm going to have background music playing as well so you guys can sit in and watch. I'll talk about little things here and there. Of course, if I have to explain something, I'll explain it, but I'm not going to be going in depth into technical questions and that kind of stuff. And the reason being, again, is made apparent. Or at least I think I've made it apparent. So I don't mean it as a disrespect to anybody, but I'm just holding the respect that we have at Falcon. It's very important to me. So we have $1 on the screen at the moment here. I'm just going to test something out. Let me know in the chat below if you can hear this. Okay, so let me just play something. Can you guys hear that audio in the background? And is it loud? Is it too quiet? Can you hear my voice okay over it? Hey, Dad has supply chain management related business. My family's the same, and it'd be great if we could network. Oh, that was a long time ago. That was a very long time ago. That was around 2007 or 2008. He unfortunately lost everything doing that business. What had happened was he was importing and exporting rice containers from, I think, Botswana or Mombasa, one of those two places, I can't remember where, all the way into South Africa. And what happened is his container got stolen. Not stolen, but it got seized, let's put it that way. And he went into, I can't remember exactly where it was. It was like the town centre at the time of wherever he was, whether it was Mombasa or the other place that I mentioned. Mombasa, or what was the other place that I mentioned? It'll come back to me. But anyway, he was walking around and he saw another guy walking around with a sack of rice with my dad's trademark on it, my dad's name on it, company name at the time. And they told him, Botswana, yeah, and they told him to leave, otherwise, he'd be dealt with. So his container got stolen, he got robbed, and yeah, it wasn't a nice experience for him. But that was a very long time ago. Okay, so if that's the case, let me play some different. Let's get some. Right, okay. Yes, this will be uploaded on my channel, yeah. Not an issue. I mean, look, these things happen, right? And the good thing about that is, imagine if I'd have grown up in a different household where my father was a multimillionaire, right? And I had everything given to me on a plate. I would not be embarking on this journey. I believe every single family has that black sheep, right? Has that single person that changes everything. So, hold on a second, I'm getting a text message here. So everybody will have that. You guys here, if you're embarking on this skill set or whatever it might be, is completely different to what most of the people in your family likely would have embarked on themselves. Most people go for the traditional route of education, but you're choosing to do something different. And so it's not a coincidence, put it this way, that these things line up for a particular reason. We have a particular life path and a life purpose. And the reason that is because, I mean, look, you got to understand as well, there's certain things that are beyond our comprehension. We can't comprehend everything, but it all adds up. Like, I think it's like every second or third generation, there's always that one person that comes along and actually changes everything for the whole cycle of hard times create strong men. Strong men create easy times create weak men, etc. It's that cycle, and that happens in families as well, and in lineage, if you like. So it's no coincidence. And plus, this is the time, one of the very rare times actually in history, that's the easiest to make money, but it's also the easiest time to lose money as well. So you've got to be around the right people. It's very important. The black sheep in my family, brilliant. Yeah, I'll show you the channel for the music in the background. Awesome, Sammy. Take care, bro. Right, so $1, we'll talk about that in a second. As of yet, I'm just waiting for an insurance entry on this. So hourly push down, 50-minute play, and then we'll refine on the 5 if need be. Let's go over to. Let's go over to this. So, what pairs do you guys want to see me test? Please, anything except the NAS 100. I will test anything except the NAS 100, the S&P, and that's it. I don't want to do them too, please. No, not at all. I'm aware of it, Francois, but it's not something that dictates my trading. I trade around it. I don't trade any news. It's not a bearing on my trading at all. Never actually tested the DXY, interestingly enough. I'm never testing Euro Swiss as well, Chucks. It's not happening. I don't understand why people trade Euro Swiss. I'll tell you why though. Why I think people trade exotics or these unheard of pairs, even though Euro Swiss is not technically an exotic, but why people trade these really rare pairs is because if there's conditions, for example, where the markets are slower in particular regards to your system, then most people can't facilitate, they can't emotionally handle the fact that there's no trades that are meeting my plan, there's none of this, etc. And so because they can't hack it, they'll try to scour the market for trades in different markets, Euro Swiss or like Euro NOK, dollar Singapore dollar, which is a brilliant pair, but I'm giving an example there, right? So it more comes from a point of FOMO, because you've got so many opportunities that are available in the whole year. Okay, yeah, there's going to be periods in the year where, periodically speaking, one quarter of the year, it'll likely be a lot slower than the other quarters, okay? Also keeping in mind, by the way, as a tip, when you get experience in the markets, what you realize is that there's always, every single year, there's always that one quarter that'll make up your entire year. Like, they're always there. Every single year, there is one single quarter, guaranteed 100% fact, that will make up your entire year. And then on top of that, everything else is a bonus. But there's always that one big quarter in the year. And this is why you've got to be prepped and you've got to be primed from day one of the year all the way to the final trading day of the year. You have to be, because you never know when that quarter is going to come around. You've got to keep a constant flow of focus. If you don't keep a constant flow of focus, I'm telling you what's going to happen is you're going to go backwards, you're going to lose more money, and you're going to lose your confidence with it. But we'll talk about all these things in a bit as well. Yes, this will be uploaded. So look, when you've got opportunities on the majors and the minors and commodities and indices markets, you don't need to dive into all these hyper niche instruments or hyper niche markets, which realistically speaking is just useless to trade them. So yeah, this live will be posted. So let's look at the pairs. Tanaka knows me. I like Germany 30. Let's do the DAX. Sorry, it's a guilty pleasure. I've got to do the DAX. Keep an eye on this in the meantime. This has got a little while yet. When you've got price action like this, just wait around. This is the first signs of a developing correction. So we see something like so going into late New York. We could take that short. So let's do the DAX. Go with the daily. Right, I'm not going to be speaking much. I'm going to start it from. Oh, by the way, before I begin, everybody knows my opinion on backtesting. I do think it is the most pointless activity you can possibly do, and I think it's a waste of time. I'll make that abundantly clear. I don't think backtesting is useful at all in its conventional form. Backtesting, when redefined in a way of, let's say for example, at the end of the trading week, you're looking back at your week, you're looking back over your top pairs or the tradable pairs in the week, and you're seeing what opportunities you missed, opportunities you took, and you're testing that week with regards to your trading plan, which you should all have, number one. And then number two, you're looking at the quality of the positions that you took and you're testing it that way. That's perfect. In fact, I think that's an imperative. I think that's very, very important. That's a non-negotiable that every trader should be doing. But backtesting in the form of just pulling out 3 pairs, going back and just collecting data and logging it into an Excel spreadsheet for the sake of it is so stupid and nonsensical. It's beyond me. I don't see why traders do that. I'll tell you why they do it. It's because they're bored and because they want to feel worthy, right? And so what they do is they think, well, if I'm at the screens and I'm clicking buy and sell over and over again, and I'm collecting all of this data, I feel smarter, I feel better about myself, and so I'm more qualified to be a trader. No, you're not. Backtesting or whatever, it does not qualify you to be a trader. There's a lot of other misinterpretations, okay, that I'm going to discuss towards the end of this YouTube live, where people, I would say, misqualify themselves as traders, right, based off of, for example, passing a 100k funding account, right? They say, oh, I'm a 6-figure trader now. It is the worst but also best thing that's happened to traders in the recent times, right? So anyway, I'll talk about all of that. I'm very excited to dive into that because I'm going to squash over a period of time a lot of these nonsensical topics that are corrupting traders' minds. And those who listen will listen. Those who understand that God's given them 2 ears for a reason and a brain to use, you'll find a lot of benefit from this. Okay. So let's go back to here. So another point I want to touch on here, guys, just while I'm highlighting this, is that imagine within this price action, imagine you were someone who's trading one instrument alone, right? You're just trading one market, and Germany 30 was the only market that you were trading. Literally, over this period, there's hardly been, barring this, which you could have ideally even set a limit order entry on, but you wouldn't have been triggered in. Okay, you wouldn't have been triggered into that because there wasn't any preceding candle, there wasn't any insurance entry within that. I think barring, I can't use the 15-minute here because TradingView won't let me. But there's a small little reduced risk entry in there which you could have actually got involved in on the 15-minute, hence why I highlighted this pair before, or this setup before, as you guys may have seen. Got it getting in at about a 48 pip stop, which is normal. You'd have held through and probably got out for about 3 points. So call it even just 3% profit, right? Which to someone who's trading on a 50k account, 100k account isn't life-changing money, but you're trading on a million, it's different. This is why capitalization is a big thing. So I want to talk about something with trading psychology here, which a lot of people think is a scam, which doesn't make any logical sense at all on any single level. Over this period of time, let me get the date and price range from literally, so it would have taken you about there, right? Roughly here. All the way through to here. You have over a month, right? Over an entire month of trading. And you made about 3.5%, call it, on substantial money. Let's just use the million mark. That 3.5% equals roughly about $35,000, yeah? On something like $50,000, or let's even say $100,000, equals, this is very important to understand, $3,500. Now, to some people in here, the $3,500 may be life-changing money. I'm talking about it globally. In the bigger grand scheme of things, $3,500 won't change your life. But 35k, which is what most people, especially in the UK, make, and this is in dollars, so around £30,000, make on average in a year. You making that in a single month. Do you think this person is going to be pressured throughout this period here? Do you think they're going to be pressured to take a trade? Do you think they're going to have any impulsivity? Do you think they're going to have patience issues? Or do you think, you know what they're going to do? Is they're going to sit back and they're going to relax. They're going to understand, okay, there's no trades at the moment. I'm not going to get involved. A lot of the reasons why, putting aside all the different psychological elements that we talk about in trading, you know, your mental framework, etc. A lot of the reason why people do, aside of all of that, get involved and you know, make stupid and rash decisions in the market is because they're not well capitalized. But to get to a point of being well capitalized, you have to have the correct mental framework in the first place. And when you get there, everything else is super easy. It's a success momentum cycle that's talked about very heavily in Rewired. I will be posting a link to that in the chat later on towards the end. But you will see how it all adds up. Okay, so when you get to a point of this capital, okay, or even, you don't even need to be trading a million. I mean, talking 500,000 onwards. And this is proprietary capital, guys, which is completely different to trading your own personal money. You know, there's no point calling yourself a 7-figure trader if you're handling, say, $1 million in proprietary capital, even though technically managing 7 figures and is an amazing achievement. It's fantastic. I'm not taking away from that at all. It's not my point. But that could get wiped out overnight. Not that this will likely happen, but if a prop firm shuts down, are you now a 7-figure trader now? What if they go liquid? You know, what if something happens? It's not even your money. So you're managing 7 figures. It's a bit very different. Okay, in proprietary capital. So that point I'll talk about later. But if you're correctly capitalized, you're not going to have a lot of these issues. And the momentum only picks up. It only gets better and bigger after that. And that's my point. So with capitalization, very important. But to get to that stage first, you need to have the correct mental framework, which is why no matter what you say, no matter what you think, trading psychology is the final and most important tenet of the three out of your trading strategy, trading plan, and trading psychology. Out of the 3 tridents, it is the number 1 most important, because without it you can't complete the trident. If you can't complete the trident, guess what? You can't be profitable. Simple as that. So that's something I wanted to touch on in there. Most traders, rookies, okay, people have no understanding about mental framework, weak-minded people throughout this period, if they were hypothetically trading one pair, this is. Imagine how erratic they would have been. Erratic price action, erratic behavior, right? Let me check something. Okay, cool. Erratic price action, erratic behavior. Just people who lack self-control, basically, which is 99% of people nowadays in nowadays world. Again, same thing here. Imagine that trader's trading this market. Oh my god, somebody else is taking a trade. I'm not taking a trade. That means my strategy must be so poor. You know, a Bob down the road has made, let's just say Bob, right? Clever Bob. There's always Bobs everywhere. Happened to get involved here. And Bob happened to get out of this move for 30%, right? Bob made a lot of money, even though he's trading $1,000. But Bob made 30%, right? I promise you, Bob, at the end of that year, because you don't know how sustainable his trading system is. You don't know how sustainable his mental framework is. You don't even know what his experience is like. You don't even know what Bob is like. You just know Bob's made 30%. Now, because of Bob, who you have no idea who he is, how he trades, what he does, you're now going to go against the parameters of your system and actually ruin things. When you don't even know if Bob's got 2 months of experience and he's fluked the move and he just got involved, which you can do, and then what's going to happen? At the end of the year, Bob's going to have lost all his money and Bob's going to be down minus 30 instead of up plus 30. Right? Job done. So let's play this forward. Let's get this over and done with. I'm going to play this forward on the 4 hour. And actually, instead of using the bar replay, when there's a trade available, I'll add my risk to reward tool on. Excuse the neighbor's dog in the back. Okay, so what's happened here? Right, as we can see, price has broken past all-time highs on the DAX. It's come in, it's come through, and it has near missed if this loads. So it's come into this area here where there's clearly volume. Okay, and the reason I say that is because it's broken price structure from originating from this area. 1 move, 2 moves, 3 moves, final move, it's broken through. So it's tapped into that, it's accumulated its volume here, and it's also triggered from here, and obviously this move has occurred. But whenever you have a near miss, you can always come back down to fill that. So the only way I'm going to take this position, if this completes like so, to retest the highs, or to come into these areas to sell off again to fill the near miss. Right. Okay, so we've come in, not forming any clear kind of structure. Okay, so what's happened? Price has come up, very clear. It's failed to form continuation. If it forms continuation down here, right, and if it's seen and deliberate on the 1 hour time frame, you've got to understand this very clear point. It's not actually rejected from a value area. If it rejected from here or here, these areas, it'd be different. So I'm keeping in mind it's got to be deliberate price action, otherwise I'm not taking the trade. And it didn't form in the end anyway. Now we've got price in the form of, or in the state of, sorry, continuation, like so. I've got to understand, right, it's not actually tapped into this area, but it still has stalled, pushed higher, formed continuation. So if we get another continuation inside of that, I'm more than happy to take that, which again we didn't get. I don't know if I can go to the 15. Oh yeah, I can. Oh, brilliant. So again, another close call. Like so. I don't trade off the base of the trend line, I trade based off of the ray lines, which we didn't get to. That's totally fine. We've also had this sort of little inner pattern here that you can see, like a squeeze. That's more of a running channel formation that we've got. As so. Again, not my taste. So that's totally fine. Now you guys can see why we don't trade one pair. There'll be a period where, I mean, for how long? Since November to December. Or longer than that, I think. Yeah, from November to December, for a full month, there's not really been much, barring one trade. Now again, you might trade a system where you can actually trade one pair, but that's system dependent. There's no strategy that's the right strategy out there. There's just more effective systems and less effective systems. But a system is only effective as a trader makes it, or lets it to be. You know, just like a calculator is only as smart as the person inputting the calculations into the calculator. So if I don't know any maths, what good is a calculator to me anyway? Do you know what I mean? So we've clearly come in here on the left, right? We tapped into that. Got this little entry here. It's not really come from a value area of any substance anyway, so I'm not really fussed. What am I looking for on the higher time frames on this? Let's have a check. Apologies guys, I had to attend a delivery at the door. Anyway, so I'm getting back to it again. Nothing of crazy substance. What am I looking at on the higher time frames down? Well, really and truly, name is to be filled. At least, as a minimum, Germany 30 tends to do this a lot. It tends to form very weirdly large continuations. So if it comes into this area here, breaks out, breaks back in continuation, I'm more than happy to take that shot. So let's have a look. Nope. Beware of this. Why? Because look, we had structure point, we broke through that with momentum, so alright, we're coming back to the all-time highs. And why do you think that is? Alright, using common sense. Look at all of that came from this area. This price is clearly going back into there, and we just had a slight miss, and then we've had a reaction here. So just about seeing continuation now. Little squeeze there. It's all good and well seeing it in hindsight, but I would never entertain that in the moment, because that's not coming from anything. This is formed this, and then this. How many things can this form into? There's no point in entertaining that at all. Now that is a different story. Have a look at this. I can already tell you the risk reward won't be good. No chance. That's something that I'd prefer as a risk entry up here. We get involved there, and then obviously we've got a different trade, but we didn't get that. Okay, so we got to move on. Most people who haven't built the correct framework again would be absolutely dying inside in the moment in the live conditions if this was the case. But again, we trade multiple pairs. Have a look. Not just one pair, because the market has its cycles. We're not, look, the way we trade is not predicated around going down to the 1 second chart and capitalizing on one single candle. We look at moves in the markets, which is a lot different. So we can see we've had this sequence of continuations on the way down, as we can see here. But I'm trading in accordance to my plan and what is high quality. Just because they played out here doesn't mean I have to base my entire trading around, which is what people do, my entire trading around what? 11 days in the markets. What, am I going to change my entire trading parameter around 11 trading days? Really? Exactly, Kelvin. It's a very short time. The grand scheme of things is absolutely nothing. And again, we have to. I've always said this, even in the old backtesting webinars, when we used to do the backtesting, that we're doing one pair. People, when they're testing, they always forget the fact that they're literally trading one pair. You know, so you can get caught up into a lot of different things. And this is why I don't believe in backtesting personally. But again, we're doing it here for entertainment purposes and educational purposes, of course, as well. Ooh, that is beautiful price action. So we have 1, 2, 3 arcing double bottom straight into that structure, breakout. Lovely. If we get continuation to the upside here, I'll go long. If we don't, we stay out. Quick glance at this and CPI. That's totally fine. Let's go back to the live markets for a minute and see how things have changed. All right, so if we rein that in for a second, so I'm not placing too much emphasis on this or this, not really bothered. Plus it's Tuesday. I don't base my trading too much of days, but we're going into the middle of the week, which is normally the meat and potatoes of the market. So let this play around, let it mess about, and it will likely come back down if it is going to short and give us the entry anyway. So good thing we don't get caught up into that. Aussie Kiwi, ooh. I like Aussie Kiwi as a very short-term long. So if we actually, this could be a trade today. If this candle or the next candle or whatever, we need a candle to close here. The next 15-minute retrace, because this is just volatility. It's just CPI news, volatility, nonsense. Negligible price action. If we get a retrace here, after a candle closes, after around the edge of structure there, then what I'll do is I'll take the entry, I'll crop the stops through this. We'll likely get him for about a 9 pip, it'll roughly add up to be. I don't look at the pip amount, more so the room and the protection. So 8 to 9. And then I'll be very aggressive with my management up to here and up to here. But Aussie Kiwi is notorious for this. Like, look at it, for example. It will keep on going, right? So the reason why we have to understand that these trades are important to look at in certain scenarios, okay? You have to first get the fact, well, what can it evolve into, if anything? If we strip all this back for a minute, let me just lock and hide that. What can this turn into? This can turn into a larger continuation, right? And we will get this sort of area like so, which is also very feasible entry. Not for a risk entry per se. Here, because we have a 2-touch. I'd wait for a break out. It will likely tap into volume here. Break back in, continuation, and then we go long. Or we're actually responding within this structure here. Now the reason why the risk entry can be feasible inside of here is because we have a 3-touch structure into this. And we're retesting the back end of this continuation here that we've got. Okay, this is sort of snipped out as well, and it has triggered into there. Usually with these larger liquidity points, there's usually a range of about 50% that it taps into, which it has done there. Okay, so it's actually grabbed that through, it's broken through, not with the most momentum, but then it's formed a deliberate continuation structure here. So the fact that it's formed a 3-touch structure there, if it does actually complete for the entry, let's say, so remember the setup fits the plan, but that doesn't validate the entry for the trade. This is a big misconception that traders have. Just because it meets the plan, I'm going to take the trade. No. It's the number one way to lose, depending on your system. I'm talking about most people here. Meeting the plan is one tick box. Secondly, is the trade even worth taking in the first place? Right? Just because it meets the plan doesn't mean it's worth taking. You got to look at the actual risk parameters of the setup. Okay, if the trade is high risk or low risk, etc. So, what particular elements in price action, what particular factors in the market here push the trade to being a higher risk position versus a low risk position? Right? Is there anything that you can do to alleviate that increased risk? So you've not got just high risk written all over your portfolio. You don't want that. So certain factors obviously in the system that we have to pay attention to. We have the near miss, push down. If we get price closing at or around the edge and we get that small retrace, again, because this is all wick, volatility news, we don't pay attention to that, then we'll get involved and we'll go long. Very simple. If that was a two-touch continuation, I wouldn't be entertaining that. I'd be entertaining a break back in and then a continuation. So, so it's just, this chat's distracting me. It's cracking me. It's cracking me up. Anyway, I didn't mean to get thrown off with laughter here. Let me just get back to work. So that's that. Euro dollar is the preferred position. Let's have a look at some other markets at the moment. AJ. So anyway, AJ, if AJ pushes down, the entry's simple on that one. Again, euro dollar we know. GJ, I'm not really bothered with pound yen yet. Pound yen, with where it's at, look, it pushed down, it formed all the factors that we needed, everything that we needed, it actually formed. It formed the continuation, it just didn't commit. So I'm not going to be taking in trades around here. I want price to break through, decimate these lows completely, and then I'll look for the entry, because otherwise anything around here you're increasing risk for no reason. Any continuation like that past the lows, and we're in, game on. Or even on the lows, to be honest. Let me emphasize that point. Even on the lows, because if it's going to react and turn around, it wouldn't form a continuation of this size on the lows here. So on the lows or below the lows, I'm totally fine with that, actually. Kiwi dollar, not entertaining at the moment, but again, if we break back in, change in sentiment, continuation, great. UK 100, just waiting for that one, as you can see. Kiwi CAD I will only entertain if this now forms a continuation outside of this area here, because then we've got the second continuation that we're trading, which is lower in risk. I love that. Pound dollar, I'm not really too fussed. So we're just measuring these two trades. I'll likely even take a trade live if this does actually end up completing at that area. Okay, so we've had the close on that candle. Now it's about seeing, do we fill? You see, this is a mistake traders make. So we don't see it now, but normally the wicks would be a body break out, body break, close back in. They would get involved, not realizing that we've actually got a huge wick there. So I'm waiting for that to get filled, see what happens in this area here. You guys are too funny. Let's have a look at Div. Sorry, not Div, Dev. Not a very wise name, is that, Dev? You would be Indian as well. Study economics at Cambridge. It's very good. I've never even been to university, so you know, I'm not cut from the same cloth as you. Yeah, to be honest, guys, just let Div, sorry, not Div, let Dev, just let him speak. The more people speak, the more they make mistakes and the more stupid they make themselves sound, so I'm not going to entertain him anymore. People's lack of common sense and lack of logic tends to come out the more you let them bark and bark and bark like dogs. You know, the loudest in the room usually is the one who gets run over the quickest, so let him carry on. I'm not going to kick him out deliberately because I want him to make himself look more stupid. It's very enjoyable to see someone dissimulate their self-respect without even realizing it, because arrogance is blinding them from seeing that, and ignorance. And I feel like people like that, even if he's on a fake account as well, it's even worse because it demonstrates a mental illness that many people have nowadays. That you can't actually save everybody from that, unfortunately. Some people are so stuck in their own heads that you can't speak to them. It's like speaking to a brick wall, speaking to a zombie or someone who's under deep hypnosis of some kind, where just everything you say goes in one ear and out the other. You will say, don't run into that wall because you'll hurt yourself, and they'll run straight into the wall. Please don't put your hand in the fire because you'll burn it, and then they literally just put their hand in the fire and burn it and then blame you. So we have people like this that we deal with all the time. If it was up to me, I would actually deport them to a mental asylum, but obviously it's not the world that we live in nowadays, and the world doesn't run the way that I want it to run. But if it did, I would genuinely deport people like that straight to a mental asylum. You know, so anyway, besides the point. I mean, even, sorry, just to finish this off, judging by his, if that is actually you in your profile picture, Dev, I'd be pretty embarrassed, man, because you just look like a geek. I'll be straight. So I can understand that you've gone to Cambridge and to study economics. Your profile picture screams that. So yeah, man, I don't know who broke your heart. I really don't know who broke your heart. But I don't think it got broke well enough. Anyway, so that's that. Euro dollar. Okay, so I'm gonna put Aussie Kiwi on top because this could be a priority pair at the moment. Let's go back to Germany 30, and I'm just gonna set an alert on this in case I don't miss it. In case I miss it, sorry. Okay. There's not actually been much here. See if we do get anything. Nope. Nothing special. Germany 30 as well, by the way. I'm talking about based on how we trade. It doesn't provide trades very often, but when it does, they're very clear, right? They're very, very clear-cut structures. That's one thing I know about the indices markets as a whole with how we trade. Have a safe flight, bro. Enjoy it. Does anybody in here know why Mark is flying over to Canada, by the way? Is everybody in the loop? I'm getting pretty bored of testing Germany 30 now. I never thought I'd say that. Oh. What do we have here? Okay, so don't be fooled when you have this price action. It breaks back down and it goes straight back higher over literally no value area here. This is the main point. But remember what I said. With large liquidity ranges, what do we have? That is to the T. Alright, so I think Dev got roasted that bad, bless him, that he's trying all he can with his Cambridge economic degree power, all of his cognitive function to try and pick out something that he can use to make me annoyed or make me angry or to trigger me or to come across in a way where he can, you know, ruin my reputation of some kind. He's using all of that brain power, all of that geeky brain power that he's built up over the past, I don't know how many years of hate and pity. That's all building up inside of him as he's hearing this right now. To try and think, how can I take him down? How can I say something so hateful that can annoy him? He's trying to cook up something at the moment. Oh, it's just so cringe, honestly. It's really, really cringe. It's so shocking. It's usually the academics that are the most immature of people. And I get that because school doesn't allow you to, doesn't matter where you go, Cambridge, Harvard, you go to the best universities in the world. They don't teach you, you know, how to build the correct mental framework for life. No matter where you go, you're probably around, you know, high net worth people and those kind of, and stuck up people for that, like, in universities like that. Some amazing people as well, some really intelligent, talented and skilled people as well. But the school system isn't designed to help you actually think in a way where you can think creatively, you can think by yourself, you can think independently. They teach you what to think, not how to think. You know, hence why a lot of these people are ignorant and suffer with the disease of arrogance, because, and they can't get really far in life because, you know, you have to think creatively, you have to think independently and critically in life, and you have to think openly outside of the box in life, which is something that's not taught in schools, you know. And so yeah, so this is likely a wick on the 4 hour. Yes, we can see that. Lovely. So I'm going to draw through that first trade. All right, cool. So this would be an hourly risk entry. This is around 1 in the morning, which is actually, there you go, 8 midnight and then 1. So it's post swaps. We can cut through that because that's just a wick. We get involved at about an 8 pip stop roughly. We'll be at break even, of course, at this time. I'll be very aggressive management because I'm still understanding that this has not tapped into a price extremity of any kind, such as this point here, but this is coming to the midway point of this, and it's turned around very aggressively and it's formed a continuation. So you've got to understand with that, what comes with the territory, that this could form into multiple different things from here. Just because it's formed that, where's it going to go to? Here at most? Is it going to break back into that range before? We don't know yet. So this is where I'd be very aggressive with my management. Could this break out a little bit higher, break back down and continue? There's going to be so many complexities here. So this is a higher risk position, by the way, if anybody wondering. Okay, so I'm locked in 1% roughly. Yeah, I'll have a look at some pairs for you guys in a sec. Right, yes, I'd have been out for about 2.3, maybe at my peak 2.5. What time was this being? 7 a.m. Top of structure rate. Yeah, okay, that's fine. 2.5%, nothing too crazy. See what this forms into. Do we get a bear continuation here? Do we get anything? Oh, starting to form something, but don't get lost in it, because you got to understand we are still not trading from a value area. So risk entry here would be higher risk, obviously, because look, where have we come from? If this little mini double top is nothing, that's not a value area. That's not anything that you should base a trade off of. But here's the thing, if we were to be responding with the continuation structure, we form the opposing continuation pattern, which I talk about a lot on the webinar. It's one of my favorite structures and patterns to trade. Right, so we've not really come into anywhere significant. So the risk entry on that one is higher risk. I'm just going to be taking every trade here that meets the plan. I don't care about the risk. I feel criminal for saying that. Okay, this is starting to mess about. At this stage, I'll just take the hourly entry. Roughly around the same area. You can get involved with the 8.5. This is probably going to be a loss just looking at it, but take the trade anyway. There you go. So that's a simple one done. Now this is where people will start forcing the trades. They'll start adding this structure on into this one, right? Tagged in, tagged out. I didn't even know that was going to come, but I just know, looking at the pattern, the price action, that these things happen. You know, you draw this, you have that structure, you take a risk entry, and there you get tagged out. You're like, oh no, okay, I did that wrong. Let me do it on the wick, and you get so caught up into it, not realizing where you're actually at in the first place. Now this is clearly responding to all of this. As I said, that's a wick on the 4 hours, so you can draw straight through that. Now any continuations inside of that now would be fantastic. Now there would be a low risk position if we get any continuations inside of this. Bull flag continuations. I think there was one on the break there. No, there wasn't. Okay. Oh. Would have been there. So again, 3 touch entry is also there for the continuation long, which I didn't see before. Again, higher risk, just naturally because of the risk entry element. But that trade, if you're not involved, and this is all situational. I mean, if you're in the positive and you can afford to take that risk, great. If you're in the negative, that's not the kind of a trade you want to be taking. So it's financially, situationally dependent, if you like. Exactly, Zane. You know, well said. You know, people think that they'll watch this video or this live afterwards, and this is what's going to make them profitable. Of course, I'm going to try my best to give advice in terms of the whole blueprint of being profitable, but you've got to understand, you need mentorship in this game. You can't do this on your own, and if you try to do it on your own, you'll just add on unnecessary years for absolutely no reason, no point. So you need guidance, you need the correct education. It's the #1 facet of becoming a successful trader, is you need the right education. And that's with any high performance sport. You need the correct education, otherwise you're just going to set yourself up to fail, and it's pointless. I've never understood that ego element of it. Hey, did you look at the candlestick confirmation before entering, or you just trade? Always the candlestick confirmation. Structure first, candlestick second, but candlestick is always still there, right? People hear that and they just ignore candlesticks, but they forget that candlestick is still second and it's the final part of it. So for example, on Aussie Kiwi, if we get this close here, and we're roughly on the right time of the day as well for this to play out, but if we get the close there, what's that going to be like on the 1 hour time frame? No, this is an important one actually. Perfect. Okay, so the next candle is closing within about 1 minute, so we'll get our answer. Let's actually stay on this screen for a minute. Anything changing here? No. Okay, cool. So if this closes at or around there, okay, which would roughly be around this area here, and then we get the following retrace, you guys will see what I mean, right? You guys will see what I mean in a moment. Let's wait for this. And by the way, just to add, if it doesn't close, and I'm being picky here, call me a perfectionist, but look at the structure that we're in. If it doesn't close right at the edge, then the next best entry would be the hourly risk entry, ideally as a bull pin bar, bullish low test. There you go. So if we get a bullish low test close on the hourly, see what the 15-minute close like. Yeah, okay, cool. This is going to be an hourly entry. So looking at this now, if we get a bullish, is it bullish? Yeah, it'd be bullish high test. I get confused to this day. So let's say the body's like so, or like a bull candle, obviously we get the wick through there. Then I will enter like so. I will stop drop through that. 10 pip stop. Even the dog agrees in the back. 10 pip stop. Could go a little bit lower. We'll see. Again, it's all situational until the actual entry. I might even stay on this YouTube live until then to execute live if we do get it. If we don't, then I'll cut it off. And then aggressive management towards here and towards there. The reason I say pin bar is because if we get the retrace, the risk to reward is going to be terrible. The only way we could enter, if we get the retrace candle like so, and it's a pretty big body, then I will set a limit order on 50% of that body. So then the next candle does tag me in, and we get the same exact risk to reward, there or thereabouts. So that's the hourly entry. The 15-minute entry would only be if we stall around here for a little bit. Okay, so for the next, I would say 30 minutes, so which is like next 1 or 2 candles. And then we get a following retrace candle. I'm very specific on this, and the reason I know that, and that's not written down in my plan to do it like that. I've just mastered, I would say, without sounding egotistical, and every trader should get to this stage, looking at the trade independent to the scenario, assessing it correctly, and seeing what's the best play for me here using my plan. So you see your plan as sort of like a chess piece, like chess pieces, the setups and the entry criterion. Then you use those chess pieces correctly based on the situation in the moment. That's how it's supposed to work. The reason why I'm not going to be entertaining the single candle alone is because we've had this. Price tends to fill these volatility wicks and all sorts of stuff. So the first minimum that we want is for price to close at or around that area. The second, if we didn't take the 15-minute entry, to lower that risk would be a little bit of a stall here, and then a retrace back in. Okay, then we can get involved like so. We can get in with about an 8 pip stop. Job done. If none of those happen and it just starts to mess about, then the final one is going to be the hourly entry. And if we don't get that, then great, we move on. I'm still keeping in mind, and traders forget this in the moment of execution, that this is a very high likelihood. This can happen. Right? Or even a break back through. And then you look at that thinking, why did I take an entry I shouldn't have? So you've got to be very particular as to how you take the entries here. Extremely particular. I'm in overall net profit for my account, so I can still afford the risk on the trade overall. Whereas most people, they would just say, okay, trade fits my plan, so let me just take the trade. No, it doesn't. It's not supposed to be that way. Do that, try it, and I actually put my coaching students through this protocol. Anybody in here who I've coached will know that I actually say for the first 4 weeks, 5 weeks, just try follow your plan alone. Forget trade quality, because you want to prove to your brain that It's not as simple as just following your plan. You can still incur unnecessary losses by just following your plan. It's how well you follow it when you do follow it, how well you utilize the criterion that you've got. That's the key, that's the trick. I'm just talking on behalf of how we trade, by the way. So stall on the 15 minute, 1, 2 or 3 candles depending on what we see now. Then the following retrace and we get involved. If none of that happens, hourly entry. Otherwise, I'm staying out. Also, another thing you got to consider, like I said before, irrelevant of what kind of pair it is, you're still very high up, right? This one here is right beneath the high, so we know this is likely just going one area and it's happened to break through. Then we form this little point here like so. Now we're just forming continuation. So when this happens, this can be part of all sorts. This can be part of these structures that then do this and then go, right? So you can do all sorts of stuff. So you need to be very picky with your entries in these areas. So don't lose sight of that. If you're referring to this hook point, okay, this is why I said that the potentiality of the larger structure forming is there, but you've got to also see the fact that as we were coming down into this actually wicked through to that, right, and it's pushed higher and then formed another deliberate 3-touch continuation. So you've got to play it by ear and really just, you know, bite the bullet if you like, that this could just commit from here. It doesn't have to come back down to there, because if it was going to, it's had 1 attempt, it's had 2 attempts, 3, 4, it's had so many attempts to come back down and tag that. Right, so it can still do that, but the likelihood is low because we have the 3-touch. Like I said, this is not the kind of a trade that you would take if you're in drawdown. You know, you're 2, 3, 4% down. It's not the kind of trade you'd take. You're much better positioned, sorry, in trades like euro dollar if this pushes lower and gives you the entry. Trades like Kiwi dollar, if it pushes lower, gives you the entry. Trades like UK 100, if that came into this area, dropped lower, did this, etc. Kiwi CAD, if we get that long, right? So if we come through, we start to correct. It's a beautiful, but they're the kind of positions you want to be taking, generally speaking anyway. But I know I can afford the risk regardless. That's a good question, Sniper Entry King. So can I ask, why is it so hard to stay out of trades than it is to enter? The reason being is because entering a trade doesn't require self-control. Staying out of a trade does. Entering a trade is like giving into your pleasures. Entering a trade gives you dopamine. Your brain's addicted to that. And it wants that and it craves it. So if you've hardwired your brain around that, it's going to be difficult. Whereas staying out of trades resembles self-control, and that's harder to do. Self-control is much more difficult than just giving into your pleasures, if you like. And that's what traders do, not just in trading, but in life. So that's why it's more difficult, because what it resembles is different. Staying out of a trade, you're telling yourself, what if I don't make money here? Getting into a trade, I could make money here. Not I could lose money, I could make money. That's what we think. I think every time we're going to get into a trade that we're going to make money. But we forget the opposite can happen. We lose sight of that. You like the playlist, yeah? Pay me. I'm messing. Here is the playlist for you. So search Opera Infinita, and they've got many different playlists here. This one's X Sound. They're also amazing. I use YouTube. I've got ad free on YouTube. YouTube Premium. Trust me, the rumor has it when you listen to these songs, you just become one of the best traders on the planet. Yeah, let's have a look at Eurocard. So, oh, nice. I like that. Stunning. See, I can tell straight away that 15-minute. Well said, Francois. No need to wait for a 5-minute here. Wait for the 15-minute to show you the development of a continuation. Then you get involved in the 5, let's say. Alright, so that's very important. Yeah, nice. See, I'd prefer that over Aussie Kiwi as a position. In terms of positioning, that is. I actually flagged up Eurocard. I don't know why it's not on my watch. I swear I had it flagged up. Weird. So again, waiting for the stall here in 15. We'll just wait around. Yeah, awesome, Lewis. Awesome. I'm glad you mentioned that as well, right? Because your analysis is useless. As a trader, your analysis is not the thing that's going to get you forward. Like, and I need to emphasize that, re-emphasize that. I don't mean it's unimportant in the sense that you just trade the market without analysis, but what I'm saying is the market doesn't play out because your analysis was right. Your analysis just gives you an edge over a period of time. You can analyze a pair completely perfectly and still take a loss. Like, what does perfect analysis even mean? Like, really think about that for a minute. Oh, I analyzed it perfectly. But there could be 5 different traders in the room trading different strategies, and they've all analyzed the one pair perfectly based on how they trade. Who's right and who's wrong? You see how this all bullshit? So it's about, over a period of time, what edge does your analysis give you, and then you performing in congruency with that as consistently as possible. That's the game. And you don't know what most people do is they don't take trades for a while, rightfully so. Because they stay out of the market, they're being patient, controlled, and then they see Bob down the road taking a trade and you make 25% and scaled his account up. Oh my god, that should be me. Bob's been trading less longer than me. What am I doing? Then just weak mindset. They just fall victim to it. Start feeling sorry for themselves. And then next thing you know, they end up ruining their own trading. And then 3 months later, Bob's lost all his money and not trading anymore. Then you feel like a complete idiot. Forget everybody else. I'm telling you, anybody else's trading should not concern you. It doesn't make any sense at all. If you can't afford it yet, we have got a payment plan. And if you can't afford the payment plan, I would save up towards it. Okay, I'll do the best you can. Because honestly, I've read all the... I'll give you some books and videos now, but I've been through most of them anyway, some of the best and most credible sources for psychology information on trading. And honestly, with Rewired, you can't beat it. I genuinely, firmly believe you can't beat it. You cannot find a better suited psychology program that is sustainable for you out there. I don't think you can, unless you get one-to-one psychology coaching from a trading psychologist. May be different, but from accessibility and universal information, I don't think that you can beat it genuinely. And with the phase 2 coming, good luck trying to beat that. There's nothing more relevant and more valuable out there, in my opinion. There really isn't. Out there, a lot of the psychology information is educating you on trading psychology, but not teaching you how to change your own. That's the difference. So yeah. I think Dev, you need it yourself, by the way that you're orchestrating yourself. Surely your academia will allow you to go through that and understand it correctly. But yeah, so books wise, content information wise, you can look into Randy Howell's work. He's the one that I gravitated towards the most in the past, because he talks about, things from a practical standpoint of like a breathing, physiological regulation, all that kind of stuff. Emotional regulation, how to do that. But a lot of it leads you into his one-to-one course, which is like $5,000 or $6,000. It's probably worth it. I don't know, right? I've never tried the one-to-one course. Like I said, one-to-one psychology coaching is different. But yeah, you're left with a lot of information, but not actually practical information that you can root in how to fix your own psychology. So nice, Joe. Nice. Focus on trading always been hard, but not being on social media is the best thing. 100% is the best thing, man. It really is. It's just fake, man. It's so fake out there. I'm not even talking about the whole cliche, people don't show you the losses. No, I'm not talking about that. I'm talking about the fact that the image that we build looking at other people, not the image that people portray. The image that we build in our mind by looking at other people. It's a big difference, because a lot of us, we come into trading with a broken mindset for trading. We don't even realize it. Like from a psychological perspective, humans are not designed to trade. Humans are the worst people, in fact, to trade the markets, because we are emotional beings, top down. I mean, look at Dev, he's an example, right? We are emotional, top down. We think we're rational, but we're only rationalizing our emotional state. That's human beings, especially in the markets. So we're actually the worst candidates to trade the markets. That's why we have to completely change the way that we think. We have to become and wire ourselves to become probabilistic thinkers. Nah, good. I would genuinely, honestly, guys, don't overindulge yourself in social media. It is. Because again, nowadays, you don't know who to listen to, right? I will always say, genuinely, and I firmly believe this, that Falcon has kept it real from day one. Hence why we're still around and we've not dissolved like many other trading companies have or are going that way. We've actually progressed and evolved over time. We've not regressed, okay? Irrelevant of all the turbulent periods that we've had, Falcon's still around and doing better than ever. We have our own in-house psychology program, our own in-house proprietary fund. We're not affiliated with any prop firm or nothing. We don't B-book our traders. We have A-booking. We have our own liquidity providers in-house. We've done it properly. Like, everything's been done thoroughly. You can't fake that. You can't be a scam and start your own in-house proprietary fund. It doesn't work that way, especially when you're A-booking. Investors need to see, like, are you credible? Are you say what you say you are? And do your traders have the potential? So you can't be a fake and do all that. And so it's been done properly. Really, really well done. So I will always turn around and say, look, listen to what we say. Call it biased, call it what you want. I'm not going to say don't listen to us, am I? That doesn't make it. Why would anyone do that? Why would anybody say that? Anybody who stands for something or stands for an ideology or understands that they view the world a certain way. Yes, I view the world in my own way. I view the markets my own way, whatever it is. We have our own way of viewing things. That's fine. We have a bias. That's fine. I'm always going to tell you, listen to us. I won't say don't listen to us, guys, because we're just going to be brainwashing you and telling you the incorrect information. In our mind, we're telling you the right things. And that's been proven and tested over a period of time. We've got traders coming back into Falcon after 2 or 3 years. They've tried, 4 or 5 different trading systems, and it's not even a matter of trading system. They've just not found that security for their future anywhere else, because I'm telling you, most people out there don't really give a shit whether you fail or succeed. I'm telling you, they don't. Call it selfish. We just want the best traders for our fund because we want to make money and we want traders to make money. So that's the full transparency that I can give you. Why would anyone start a business not to make money? Like if you make $4 million a year in education and you make $3.8 million or $3.7 million in trading, does that now make you a scam? Like, this is the stupidity that has corrupted people's minds. Like I said, people think with the bias, they don't realize that we're a lot more emotional than we think. So yes, we want the best traders that we can possibly have because we want the biggest and best proprietary fund on the planet, 100 million plus. There are a lot of things that go on behind the scenes that we don't need to do, but we do anyway for the purpose of the infrastructure and the future of everyone. So like I said, you don't know who to listen to out there, because a lot of people just talk complete garbage. They're not talking from experience. They're talking from such a little bubble that they've never been out of. Yeah, guys, backtest and you'll be totally fine. No, complete lie. Don't indulge yourself in backtesting. How far has backtesting got anybody in here? Who's actually genuinely become successful in trading because of backtesting? There may be one person out there, and I'd love to meet them because I want to understand how they've done that. Because if that was the case, I'd be backtesting 24 hours a day. By that premise, you could be a millionaire in 6 months or less. So it doesn't make sense. So you don't listen to a lot of the stuff that you hear out there, right? Even what I say, take it with a pinch of salt. Go and see it for yourself. I'm only saying it because we've seen human behavioral patterns over a period of time, and people should react the same way again and again. We've got people who've literally scaled up on our fund and now quit. Like, you can't make that up. Not quit trading, but trading a different system. I don't have a clue why, but humans do the most absurd, unimaginable, unpredictable things that you can't even comprehend why they do the things that they do. Humans are very animalistic as well. They go back to doing really stupid and foolish things for no reason. So I don't try and sit there and predict human behavior anymore. I just accept it for what it is. I could sit here and tell you guys the literal, and I can do this, the actual blueprint on how to, if you were to join Falcon today, exactly what you have to do to get to the point you want to get to. I can guarantee I can give you the firm blueprint for that. But the only reason it won't come into fruition is because of you. And I'll explain why. I've dealt with many, many students that I've coached. I'll say many, I'll say about 4 or 5 students that I've coached over the past couple of years. I have literally said to them, just do this for 4 weeks, 5 weeks. That's all you have to do. 2 weeks later, they're doing something else. What can I do then? If I say, all I want you to do is just follow your plan for 4 weeks. I don't want you to focus, and I'll put this in bold writing. I do not want you to focus on trade quality. I don't want you to ask complicated questions. All I want you to do as a trader for the next 4 weeks is just take trades that meet your plan, and your plan is super simple. 2 weeks later, Ibi, is this high risk or low risk? Completely out of my control, right? There's nothing I can control there. People are going to think the way that they're going to think. Another example, I don't want you to watch any live content. I want you to only watch the Sunday market breakdown and midweek for the next 3 months. Just do that. Cross-correlate your analysis to marks, and as it gets closer throughout that period, I'll assess your analysis at the end of 3 months. We'll go through some pairs. That's all I want you to do. I don't want you to take any trades, nothing. I'll make it crystal clear. 2 weeks later, I've taken this trade. What do you think? Genuinely, I'm not joking, guys. These are real stories. So there's only so much we can help. I can give you literally the blueprint. If you're serious and you're not wanting to mess about, right, and you're not frugal with your money, and you're open-minded, okay, and you're disciplined, you're a good listener, you understand how to be one-dimensional as well at the same time. It's very important to have that balance. And you can just put a blindfold on and just do exactly what I say. I promise you, you'll get to where you want to get to. 100% guarantee. I bet my life on it. The only reason you will and you won't will be because of you, though, in the end. That's humans. More like practicing your strategy and familiarizing yourself. Why do you believe? Okay, so again, I've tackled with this argument before. You get to understand your system better, right? That gives you confidence in your system and that it works, but it doesn't give you confidence to pull the trigger, which is a misconception that people have. Because having the confidence to pull the trigger in the market in the live moment is about pressure management. Pressure management is not taught in backtesting. Backtesting does not teach you how to manage pressure correctly in the moment because there's no emotion involved, because there's no capital, no risk involved. So the brain doesn't actually perceive or see a threat in a simulated environment, but it does in the live conditions. It does in the live environment. And so that clouds the way that you think. They've got millions of studies to show in stocks and in poker, in all sorts of different high performance mental sports, that your emotional state reflects directly to the opportunities that you see versus don't see. That is shown, proven, and tested over a period of time, many years. So backtesting, there's no threat. So your emotional state is completely different when you're testing to when you're live trading. So you're never going to get a true reflection of your peak performance potential when you're testing versus live trading. Period, case closed. I would only assess the trades that you take or don't take. I would only assess your performance in the live conditions because that's the truest reflection you'll get of yourself. You will not get a true reflection of yourself in testing. I've even spoken to pilots, right, for example, and I've asked them. We actually had one at our recent Manchester meetup who used to be in the Royal Air Force. I think he still is, in the British Royal Air Force. I think he's got like 5 or 6 years left. He's probably listened to this, called Alex. And I asked him, I go, well, you guys obviously go through simulation, right, before you fly a plane. Is your emotional state and your overall flying ability different to when you flew in simulation versus live flying? And he goes, well, what a silly question, because of course it is. I said, well, you'd be surprised traders think the opposite. Complete opposite. They think, well, I even asked him, I said to him, if I was to say to you as a pilot that the more you fly in simulation, the more confident you'll get flying in real life, is that true? And he's like, well, only based off of the controls. Like, you'll only understand how to control a plane better. Like, you'll know which control means what, right? And the same in trading, that when you're backtesting, you'll understand more as to like how your system operates in certain areas or whatever. But when you're flying a real plane, guys, you've got 300-400 people behind you. If you make one mistake, they're all dead. For example, if you make a mistake in the markets and the live conditions because of emotional pressure, you lose money. Sometimes worse, you make money, but most of the time you lose money. So this is my point. The pressure is different. There's pressure. It's pressure management skills, which live trading is the only thing that teaches you that. But backtesting in the form of going back on your week and testing the trades, for example, like seeing, have I missed any positions? The positions that I took, what quality were they? Going back and testing through your week, that's different. That I actually advise. I think that's very, very crucial. It's fundamentally crucial, assessing your performance. But going back 2 years ago, 3 years ago, there's no point in doing that if you've already got a system that has a proven edge. If you're building a trading strategy, obviously you've got to go back and test it. That's different. But if you've already got a built system, you don't need to go and test it. Why are you testing it when you know it already works? All you got to do is just build a trading criteria and then trade that criteria. You know a system works anyway. Yeah, you got to be composed under pressure, 100%. So Aussie Kiwi price action, what's this doing? You see what I mean? But you don't rush into the trade here. Let it stall around next candle or so. If we do get that full retrace, as soon as we get that full retrace, if we do get it, I'll get involved. But don't rush into it. This is why the getting involved in the first candle is not really wise. No, you can't get rewired for free. Why would you get rewired for free? What makes you think that I would say, yes, you're going to get rewired for free? Tell me. What makes you different to every single other person that wants to get rewired? Why out of thousands of people would I pick you to give it to for free? What's different? How do I know you're even going to be using it correctly? How do I even know you're going to be disciplined? How do I even know you're going to be trading in 6 months? How do I know how committed you are? Words don't mean anything. If you want it for free, it shows your lack of commitment. Tell me, if a Ferrari was free, would a Ferrari have any value? in society? No, it wouldn't, would it? Why does a Ferrari have so much value? Because of its price. If everyone had a Ferrari, you wouldn't even want one. No one would value anything if it was free. Trust me. Right, guys, I'm gonna take a little bit of a break. I'm gonna keep this live running, and I'm gonna come back in about 5-10 minutes just to see how this candle closes, and then if the entry's there, we'll take the entry. Listen, Falcon's gonna give you the blueprint to fix your problems. Only you can fix them. That's like saying, I hope a PT can motivate me to train. How unsustainable is that? Or I hope me joining the gym can motivate me to train. I hope me joining the gym can get me in shape. Well, if you don't use the machines, then you're not going to get in shape. If you don't stick at it consistently, you're not going to get in shape. So the act of joining Falcon, or act of joining a gym, or act of doing anything is not going to change you. It's what you do with the materials and the resources given to you. It's all you in the end. Right guys, I'm back. Alright, so looking at Aussie Kiwi at the moment, it's not giving us what we need. Not got that retrace yet. In fact, the more it stalls and then gives a retrace, the better. I will have to shoot off shortly anyway, so if I do get the entry, I'll keep you guys posted. I did think I'd get the entry by now, but of course, not as of yet. Yeah, these guys, I'm just going to wait out on these. Be patient for these. These will likely occur tomorrow. Nothing as of today. Eureka did look really nice for those of you guys taking that as well. Let's wait for the 50-minute consolidation on that one. Yep, so I will take the entry, like I said before, if we get the strong retrace to the upside. We'll wait to see how this closes because anything can change very quick. Otherwise, it's been a great live, guys. Appreciate you attending. I'll be doing these regularly over the next 2 weeks. Or next week or so even, sorry. Welcome, not regularly, but over the next week or so I'll be doing it regularly. I'll keep you all posted. Follow me on my Instagram. Thank you, my pleasure. Take care, guys. Have a solid week. Exactly, it's now verified, so nobody can make fake accounts of me anymore. And I will speak to you all very, very soon. Bye, guys.